All right, what's going on, everybody? Welcome back to the channel. It's Millennial Trades. It's January 17th, 2023. Today, we're going to be talking about a specific trade that I took this morning. Went short on PayPal using puts. PayPal opened up in a supply zone, and I'm going to show you guys exactly my mindset with this trade, why I like trading the supply zones, especially if the stocks open up in one. And I'm going to show you why I take the quick profits, taking advantage of the opening volatility, the morning volatility, and I'll show you what would have happened had I not taken those quick profits, had I not taken advantage of the early morning volatility. The option contracts that I usually trade will expire either that week on Friday. I never trade like same day expirations on SPY or QQQ, but let's say I'm trading PayPal, Amazon. The options will probably expire that Friday. If it's getting a little bit too close to that Friday, I might trade the options a week out because they're not quite as volatile. For instance, if it's like Thursday and you buy the $80 calls, but then the stock drops to $75 and the option expires the next day, which is Friday, you're going to get absolutely creamed on that one. So, yeah, we're going to go ahead, look at the chart. I'll kind of show you what the conditions look like this morning. And yeah, let's get into it. Okay, guys, so full transparency, we have just a little over $5,000 in this account. You can see that over here on the left-hand, top left-hand corner. Now, I'm going to show you this trade on a 15-minute basis just to see the overall structure of the trade, and then we'll get into the 1-minute candle so you can see exactly what my mentality was. But we had PayPal in pre-market approaching this supply area. Normally, I like the stocks to actually be deep in the supply zone, and the supply zone is basically just an area where price in the past, and you know, we're going back a couple of months now. Let me actually show you on a 4-hour chart. You can see this supply zone that we're approaching. It seems to be a pretty major area where there might be potential sellers, right? You've got this wick over here. See that big topping wick there from, I don't know, a couple months back. So anyways, now, even though we sort of have this reverse head and shoulders structure on a larger time frame, we are, you know, approaching the supply area. So going back to the 15-minute chart, like I said, normally I like the stocks to be deep in the supply area, but it's never perfect. You may have charted it imperfectly. Maybe the sellers are in slightly different places. So you can never get too hung up on this. But you can see this big candle here, this big red candle, that is where I made the profits, right? This red candle here, we opened up near the supply zone and I went short using puts. Now, before I get into the 1-minute candle and show you exactly what I was thinking minute by minute, let's go ahead and look at my trade history. So you can see I was buying these 5 at a time in increments of 2 at a time, 1 at a time. There was one where I really loaded up 10. You can see it all right here. And I bought the $79 puts. You can see the prices vary a little bit from $92 to $100, all right? With the option contracts, most of you guys probably already know this, but if the option contract says 0.92 cents, it's actually $92 is what you're spending on the contract. So I spent between $92 and $100. You can see that right over here. We bought the first part of the position pretty much right at the open. You can see that 9:30 and 20 seconds, right? Because I'm trying to get in and out of these markets quickly so that I can go on about my day. We bought 5, then we bought 2, we bought 1, 2, 3, then we bought 10, then we bought 5. So we had a total of 25 contracts at one point in time. And you can see I sort of scaled out of this position. At 9:34, we sold 5 of them for $118, and then at 9:37 we sold the rest. We sold 20 of them at $1.20 or $120. I could have squeezed out a little bit more. I think the contracts went into the low 30s, into the low 130s. I think like $132. You probably could have squeezed out of it, but it's best, in my opinion, for my trading style, to get in and out of these things as quickly as I can. All right, and you can see, even though I made all this money on this volatility here, you know, PayPal is having a pretty good day. We're up 1.24%. You know, some people would have waited until they saw this consolidation, then they would have went long, but like, I don't have time to do all that. I'm trying to play the open morning volatility, get in and out by about 10 o'clock, maybe 10:30 at the latest, and go on with my day because I've got studies, I've got other things I want to do. You know, I got family, so yeah, this is why we're trading. But that would have been, you know, a decent long. I probably wouldn't have taken it long here at all, just because the nearest demand zone, it didn't even hit. In my opinion, most of the price action on these stocks in between supply and demand zones is just noise. That's why you got to be very patient and wait for these zones to pop up. Yeah, just to get the macro perspective, you can see on the daily, right, we're kind of just consolidating here. I mean, there's not a whole lot of movement. It could explode to the upside, but it could just as easily, you know, come down and fill some of these gaps, right? We're looking pretty gappy on PayPal. Just to go over some of the macroeconomic stuff, you know, you had the dollar still struggling, which is good for stocks. You got the DXY over here. I was looking at some other things. Like usually if I'm trading PayPal, I'm going to be watching Square. I'm going to be watching Amazon, some of the other tech stocks. The bonds were getting bought up. So that was also, you know, kind of a good sign for stocks in general. But I was comfortable with the supply zone on PayPal. And here's the 1 minute chart. All right, so here we go. You can see right in pre-market, bam, we start selling off, right? It came up here, came back down. You could tell the sellers were there even before the market actually opened. As soon as I heard ding, 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 we got this drop here. Okay, on this red candle. And as soon as we broke below VWAP, I was ready to buy. All right, so I started buying. That's when I bought the first 5 at 9:30. I bought a couple more at 9:30. Then I bought, so I bought like 10 contracts at before 9:31. And then when I saw that we couldn't break above this VWAP line, right? We couldn't even, well, we broke above it, but we couldn't close above it. I went ahead and put, 10 more on. I mean, it's just my personality, and you got to take risks in this market. You have to, or you're not going to make any money. And then when I saw this candle come in, right, so we had this other green candle, still couldn't close quite above VWAP. I mean, kind of closed halfway above VWAP. You can see the VWAP line's kind of, I don't know, almost cutting right through this little green doji candle. But as soon as I saw this red candle come in, that was like 9:33. I went ahead and bought 5 more. You can see that 933.01 because this candle came in quick. I was betting that it was just going to engulf these other 2 candles here. So we had 25 contracts by 9:33. Now that sounds like a lot, but that wasn't even like half of the account. Yeah, it is a lot of risk for some people, but this is why, trading is risky. I'm not going to say it's not. I lost $6,000 on one trade a couple of weeks ago. That was my fault because just my psychology, I wasn't in the right headspace and I held on to the trade too long and all that good stuff. But we got this drop here. All right, going back to today's trade, we sold 5 contracts at 9:34. So you can see as soon as this candle dropped and it was starting to kind of base out here at 9:34, that's when I took some of the profit, took some of the risk off the table. We did profit off of those contracts. That first 5 that we sold for $118. So you figure I bought all of these at either $100 or less, and then I'm selling them for $118. So the move is not that big monetarily per option contract. It's only like, $10, $15, $20. But when you have 25 contracts, 50 contracts, you can make a lot of money in a very short amount of time. I was a little nervous when this green candle came up. I was watching the markets carefully. We still had like the NASDAQ, I think, was still struggling at that point in time. Yeah, you could see the NASDAQ was kind of struggling. All right, these are the NQ futures. It was struggling at that moment in time. And then we got a couple more red candles, and I was out of this trade by 9:37. So let's see. Yeah, right on this red candle here, I took my profit. Now I could have squeezed a little bit more out of this, right? There was another nice little, at least on a 1 minute time frame, another nice little drop here. But there's no way to pick the bottoms. There's no way to pick the tops. It's very intuitive. You really just have to be in tune with the markets, be in tune with yourself, not trade your P&L, and just be grateful for any wins that we really do get. If we go back over here, right, you can see these contracts are now worth like $60. You could probably buy them for $60 or sell them for $60. Well, you probably actually have to sell them for $58, right? But these were, like, I sold these way up here at, 118, 120, right? That's where I sold these contracts. So had I held on, all right, let's say I just held all day. I was trying to do a swing trade or whatever. Let's just say I lost control, which happens sometimes, and I just refused to sell. I could have definitely been underwater at this point in time. Some people buy option contracts and then walk away and hope for the best when they wake up the next day. So you can see, right, I didn't get everything out of this move, but it started consolidating, and I was very tempted to go short again. Right, believe me, because I saw that we had the demand zone down here. Oh, I didn't even talk about my target. Yeah, let's go back to the daily candle here real quick. So on a daily, my target on this short trade would have been the close from Friday, right? Not a hard target to hit. You know, we gapped up, we opened up with a gap. So hitting this close from Friday, it definitely could have worked. Let me actually just make this a white dotted line so you guys can see this on the 1 minute. That was my target. So I actually went right past my target a little bit, which was enough for me. And this is the whole point, is sticking to the targets, not getting too greedy. You know, once you hit the target, and you have to pick a target before you get in the trade. Once you hit the target, you should just take it, because your target's been hit. On this drop, like, I saw that I had missed some of the move. I probably could have gotten $130 for these contracts, but then it started consolidating, right? And I was tempted to go short. So let's say I'd gone short again, anticipating that we were going to fall deeper into this demand, area down here, which never happened. That would have been a very bad move for me, because you can see it, we kind of consolidated, then we just started moving up. Had you held long enough, maybe you could have averaged down somewhere in here. But again, this is like, we're getting into like 10:30, 11 o'clock, 12 o'clock. Very tricky to trade, for me at least. Anything outside of the morning volatility, very tricky. There was kind of a head and shoulders pattern here. You can see the head, the left shoulder, the right shoulder. So maybe you could have seen that, if you were underwater. Let's say you had gone short and you held it too long or whatever. Let's say you had 5-10 contracts and it just never broke that low, right? Maybe you would have noticed this and you could have averaged down and maybe at least broke even on the way back down here, or maybe profited a little bit, but that would have been a very stressful trade. And I've been in those kind of trades before. Don't get me wrong. I've done that, probably 50 times, but it never did break that low. And I'm sure a lot of shorts were figuring that, especially after that, you can see that clear head and shoulders pattern here. A lot of shorts were anticipating a bigger move into the demand zone. But that never happened. We never did break this low right here. And PayPal actually ended up having a pretty decent day. I mean, we're up 1.28% at the moment, and it's like 3:30 now. So I do like that PayPal's in the supply zone. I don't particularly like the daily chart, or at least the recent few days. It's just not very clean, for a long, but you just never know. I mean, the dying volume on the daily as well is not a very good sign. You generally want to see the volume get bigger and bigger on some of these upward moves. It won't surprise me if we open up deep in this supply zone tomorrow and just completely sell off and hit this demand area. It wouldn't surprise me within a day, maybe a couple of days, if we come all the way down to about $74. I mean, we're at, 80 now? That's not that big of a dollar move. We do have a gap here that needs to get filled. PayPal can have some extreme down days. I mean, the most extreme one was back here from December 13th. I mean, that was, just look in comparison to all the other candles. Even look at the wick here. When PayPal sells off, it sells off aggressively. And this is why I like going short on PayPal. Yeah, that pretty much is the breakdown of my trade. As far as the stop loss goes, I mean, with discipline, the stop would have been these pre-market highs if you're going short. Right? Let's say you're going short right in here, and then PayPal pops back up above the pre-market highs. Even though it's going deeper in the supply zone, that would be a good spot to have a stop loss. Some people would stretch that out and give it a little bit more room. Maybe I would even give it a little bit more room. I was pretty confident, and I'm still pretty confident on this supply zone, unless extenuating circumstances in the macroeconomic environment with the producer prices coming down and maybe our PPI coming down a little bit, and rumors that the Fed is going to pivot. All this kind of thing could send the market and send PayPal roaring up. So we'll just have to see how it goes. But yeah, that was my trade, and altogether we netted over a $500 profit, right? Which is like 12% in the account, which is great. I mean, that's awesome. It's fantastic. I did have to pay some option trading fees. You can see it says $565 over here for my P&L in the software. About $30 I had to pay in options trading fees, which is not a big deal, especially to be able to make $500. That's a lot of money, right? It's a lot of money for any Joe Schmo who's come from sort of the wage slave life like myself. this is pretty decent money. If you can do this every single day, you're going to be doing great. You're going to be on your way to $100,000 a year. But again, it's very risky. So again, I want to stress how risky trading really is, especially if you're not in the right mindset or if you're inexperienced. You know, I paid thousands and thousands of dollars my first year or two in tuition fees. You know, I call them tuition fees. And even after making 10 grand, 11 grand back in the summer of 21, I lost all of that. And then I was down $3,500 in 2022 until I started trading again in August and kind of just kept working at this strategy. But, you know, I've had a dream for a couple of years now to scalp these markets and take these daily profits out. It's extremely hard to be consistent. I will not lie. But, you know, if you can handle the risk, if you can deal with the risk, if you can deal with the psychology when you fail, if you can deal with the emotions and the feelings, you know, you will be surprised what comes up on the good trades, on the bad trades. You know, you start getting addicted to the rush of like the $1,500 days, and you start thinking that you could do that every day, and you get cocky. And then when you lose, and if you lose big, it brings up all kinds of memories of past failures, you know, memories from childhood. You start asking God, you know, when is it ever good? Where's the relief, right? You start praying to God to help you to get back to break even. And it's a very, very dangerous game, but absolutely rewarding, especially, you know, if you have the type of personality that can stomach this thing. You know, I think it's great. I'm having a lot of fun with it. It's the best show on earth, and I hope that gives you guys some insight into what it is that I'm doing and why I'm doing it, why I'm taking some of these trades. So, with that, give the video a like, subscribe to the channel, follow me on Instagram at Millennial Trades. If you guys have any questions or, you know, there's something you want to see on this channel, comment down below. I'd love to try to help you guys out with that. And as always, until next time, I'll see you on the next video.